NIO is heading for a solid year in 2022 and the stocks are to go up. Want to know more about it? Keep watching. Hey everyone, and welcome back to our channel. In this video, we'll be talking about NIO stock and everything you need to know about its growth. But before we start, do consider subscribing to our channel and turn on the notification bell to watch more of our exciting content. Let's get started. NIO Stock, a US-listed Chinese premium electric vehicle manufacturer, had a mixed year in 2021, with its stock decreasing about 40% over the previous year. While NIO's operating performance has been strong, with 2021 deliveries up to 109% to 91,429 units, it's been eclipsed by rival XPeng, which increased sales by 263% to 98,000 vehicles. Last year, furthermore, investors are concerned about China's regulatory crackdown on technological companies, as well as increased scrutiny of Chinese companies listed in the United States, which appears to be affecting NIO stock. However, there are a number of reasons that could improve NIO stock performance this year. To begin with, NIO's valuation appears to be highly appealing. The stock is trading at less than 5 times estimated revenues for 2022, considerably below the likes of Tesla, which is trading at over 15 times, and XPeng, which is traded at almost 7 times. According to consensus predictions, NIO will grow revenues by a solid 75%, somewhat less than XPeng, but far more than Tesla, thus the lower multiple isn't really justified. Longer-term prospects are equally promising. This year, NIO is scheduled to expand its model selection with the introduction of the ET7 full-size sedan, followed by the ET5 compact sedan, and there's a chance that more new vehicles will be introduced this year. With its international expansion, NIO is sure to make greater progress. The company entered Norway last year and wants to expand to 5 more European countries by 2022. NIO also plans to increase production capacity at its Hefei, China facility to 240,000 vehicles per year by mid-2022, which might boost volume growth in the long run. NIO's margins are also expected to improve as economies of scale improve. NIO stock has dropped around 7% in the last week, lagging the S&P 500, which has been relatively steady over the same period. So what's behind the current drop in stock prices? The delaying of negotiations connected to the Build Back Better Act, which included legislation that included purchase tax incentives, hurt EV stocks in general. Separately, the stock has been dragged down by broader selling pressure in Chinese American depository receipts for some time now, following Didi Xujing's announcement that it would delist from the New York Stock Exchange less than 6 months after going public due to regulatory difficulties. NIO, on the other hand, has had a couple of encouraging developments in the last week. At its NIO Day event last week, the business presented the ET5, a new mid-size luxury vehicle. The vehicle is slated to hit the market in 2022 with a starting price of around $40,000. NIO also announced that deliveries of their new ET7 sedan will begin in March 2022. NIO stock fell around 5% in the prior month, trailing the S&P 500, which remained relatively stable over the same period. The drop comes as NIO forecasted lower than expected deliveries for the current quarter, owing to the auto industry's continued supply chain issues, as well as the company's decision to retool its manufacturing lines for new models and increase capacity. While NIO delivered 3,667 automobiles in October, it forecast Q4 deliveries to be between 23,500 and 25,500 cars, about flat with the 24,439 vehicles sold in Q3 2021. So, do you think the stock will continue to fall in the near future, or do you think it will rise? According to machine learning research of stock price trends over the last 3 years, NIO stock has a 61% chance of rising over the next month, or 21 trading days. NIO stock longer-term prospects are also improving. In China, demand for electric vehicles continues strong, with NIO reporting record booking in October. NIO's manufacturing troubles are likewise likely to be temporary. The business has stated that it plans to quadruple the capacity of its Hefei, China plant to 240,000 vehicles per year, with production likely to exceed 300,000 units with extra shifts. The company is also growing its product line with the ET7, the company's first sedan, set to be on sale in the first quarter of next year, and 2 more models in the works for 2022. NIO's business's economics are improving as well. The company's net loss for the third quarter was less than predicted, with vehicle gross margins of 18% compared to 14.5% in the third quarter of 2020. NIO stock also trades at a respectable 7 times anticipated 2022 revenues, which is not unreasonable given the company's rapid growth and expanding margins. Electric vehicles are the way of the future, but choosing the appropriate EV stocks can be difficult. Investing in electric vehicle component supplier stocks can be a good alternative to play the growth in the EV market. NIO stock fell over 4% in a week a month ago, and it's still down roughly 17% in the previous month. While macro concerns like China's Evergrande crisis and rising bond yields are driving the sell-off, NIO has received some positive news on the business front. NIO recently reported stronger than expected delivery growth, with EV sales of 24,439 units in Q4 2021, over 2 times higher than last year and ahead of the upper end of the company's projection of 23,500 units. In September, the business delivered a total of 10,628 automobiles, a monthly high and a 126% rise year over year. These growth rates are especially encouraging because they occur despite an ongoing chip scarcity that has hampered auto production. So, do you think NIO stock will continue to fall, or do you think it will rise? According to historical performance, NIO stock has an equal chance of rising or falling in the coming month after falling by 17% in October last year. Nonetheless, we believe NIO remains appealing to long-term investors. Although NIO stock trades at a high 10 times consensus 2021 revenues, it should swiftly catch up to this valuation. According to consensus forecasts, sales will increase by approximately 120% this year and nearly 65% next year. Gross margins have also been increasing, rising from roughly 8% in Q2 2020 to around 19% in Q2 2021, implying that NIO should be profitable as it scales up. With the stock down nearly 37% year-to-date and over 45% off its all-time highs, this could be a good moment to buy. NIO stock fell by almost 8% in the final week of September last year, when compared to the S&P 500, which declined by a negative 2.4% within the same time period. Over the last month, the stock has lost around 5.5% of its value. There have been a few recent happenings that have impacted NIO and other Chinese EV stocks. Given the recent regulatory crackdown on Chinese internet companies, China's Minister of Industry and Information Technology recently stated that the country has too many electric vehicle players. This is likely causing some investor concern that the EV space will face more government interference. Separately, there are concerns that the faltering Evergrande Group, China's second-largest real estate developer, would default on its loans. The corporation is said to owe over $300 billion in debt, and a default might have ramifications for Chinese banks and credit markets, as well as other aspects of the Chinese economy. Evergrande has made a significant investment in an electric vehicle subsidiary that has yet to ship any vehicles, producing an overhang on EV stocks. According to past performance, NIO stock has an equal chance of rising or falling in the coming month. In the last 3 years, 142 of the 279 times NIO stock has seen a 21-day decline of 5.5% or more have resulted in NIO stock declining over the prior 1-month period or 21 trading days. This historical pattern predicts a reduction in NIO stock for the next month in 142 of 279 cases, or around 51% of the time. Looking at the stock's recent movement and future potentials, it's clear that the stock has a lot of upside potential and will grow more than 10 times in the near future. With that, we're at the end of the video. If you found it interesting, make sure to hit the like button and subscribe to stay tuned for more exciting videos. Let us know your thoughts in the comment section below. See you again with another exciting video. Until then, bye.